Welcome to Proactis Cost Reduction Series. At this month's board meeting, the executive team is having another discussion about how to reduce costs. They turn their attention to the opportunity for increasing efficiency in accounts payable. The CFO starts by outlining the current cost. They have a team of 15 staff processing supplier invoices. The average loaded cost per head, including supervisors, is about £36,000 sterling per year. That's a total labour cost of $540,000. They want to significantly reduce that figure by streamlining the processing of invoices, like many other companies are doing today. The CFO then works out their productivity. Around 70,000 invoices are being processed per year by the 15 members of staff. If you assume there are 220 working days in a year, that equates to just 21 invoices processed per head per day. This also means that their average cost of processing an invoice works out to be £7.71, and that's just within accounts payable, not the full cost to the organisation. That does sound high. And when they look at analyst reports, they find there is a big difference in performance. The top performers can be as much as 10 times more efficient as the industry average. So how much would it be fair to assume the organisation could be saving if they automate much of their processes? Well, the CFO suggests they should aim for at least 100 invoices processed per head per day. This is based on the fact that many organisations in their industry are reaching between 100 and 200 through increased automation. If they were able to achieve that, this would mean they could possibly redeploy or reduce headcount. So from the current team of 15 to just needing 6, this also accounts for other duties as well. Now that represents 324,000 potential savings. They also found that the average time span from invoice receipt to payment authorization is well over 30 days, which means they are missing opportunities for early payment discounts. The CFO outlines the situation. They spend 100 million on non-payroll spend, and approximately 15% invoiced is available for early payment discounts, with an average 2% early discount offer. If they increased efficiency to realise those early payment discounts, that would deliver 300,000 as savings. There are also duplicate and invalid invoices currently being paid because the department is always rushed and can't verify them. Let's say conservatively 0.1%. This represents a further 100,000 of potential savings. So to recap the savings opportunity, there is 324,000 by reducing headcount, 300,000 from early payment discounts, and a further 100,000 by eliminating payment of duplicate and invalid invoices. That's a potential 724,000 total savings per year straight to the bottom line. So why does invoice processing take so much manpower and time? When they take a look, accounts payable staff tell them that the whole process is paper intensive. They spend hours opening envelopes and dealing with paper invoices. Even for straightforward invoices, it takes a lot of manual effort to find the purchase order, match it to the invoice, and verify the item has been received. And when there's no purchase order, it can take a lot of research to find the originator. And whilst they have made improvements over the last few years by implementing some document scanning systems, staff still need to process and enter each one. In addition, even when there is a purchase order, it often takes days or even weeks of emails and calls to find out if the person who made the purchase has received what's been invoiced. And whilst they do take the job seriously, they admit sometimes they just go ahead and pay some invoices without getting firm confirmation that they are valid, as they just don't have time. Keeping in mind that processing supplier invoices is not all that they do. A lot of time is spent answering calls and emails from suppliers, asking for the status of their invoice. When they get behind, that gets especially bad, and suppliers can get angry sometimes. And when there are discrepancies, it takes a lot of time and effort to resolve the issues. Now this seems like a problem they can actually do something about. Whilst they've automated a lot of things over the past few years in the business, they think it's about time to outline what they need to do in accounts payable. They start to outline the following capabilities. They want to ensure most or all invoices are received in electronic form. that invoice data capture and account coding is fully automated, to ensure duplicate and invalid invoices are automatically identified. They want a high percentage of invoices to be processed straight through to authorization, automatically matched with purchase order and receipt with no human intervention. They want to ensure any exceptions are automatically handled via workflow, that early payment discounts are taken advantage of, to ensure accounts payable staff spend little or no time answering supplier inquiries. They also want to reduce the average invoice processing time to a few days, many done in one day. Above all, they would like a totally paperless process with global access to all documents. In addition to saving the $724,000 they identified, if they had those capabilities, they would gain some additional benefits as well. Better budget management with improved invoice account coding and earlier visibility. Better cash management with an understanding of overall liabilities. Much faster, easier audits. Reduced or eliminated cost of paper document storage. And improved supplier relationships due to more timely payments. Now take the next step. Consider the potential savings opportunity for your organisation. Use the Proactis cost reduction calculator.